Hey, good evening, folks. Kunal here, Bulls on Wall Street. Let's take a quick look at the markets here. As you can see, we've broken under all our major moving averages and under some key levels of what was support. And so this market is got to be treated guilty till proven innocent for now. Uh, Watch last week's lows here on the 16.25-27 area as our short-term support. If we break back below that, we could flush down to maybe 1600 or so. I have some longer thoughts on that in a previous blog called Stock Market Review, so check it out. Let's take a look at some of the stocks for tomorrow. HXM, a nice day, up 15% for the day. We've got a bottom base breakout formation here. I think if we can come out of this range, we'll probably test this 250, 260 range. S-Fund, really one of the strongest stocks in the market. This one has really been bucking the market even as we've been drifting lower here. We've got kind of like a triple test, breakout over here. Our main concern on this one is that it's up a few days in a row here, and so that leads to most likely this thing could break out and it could potentially fail as you might get a tired response here in terms of exhaustion if it does break, but it could be worth a day trade in there somewhere as it is a really strong stock and the volume's been increasing in it. I just don't particularly like buying stocks after they've been up, $5 in a handful of days. IMUU, we're flagging right over here. I think that this long term, this one looks like it's going to probably come out of this range here. Keep an eye on this tight range it's been in the last 4 or 5 days. It could kind of lead to a move to the 650 mark, and then it really have to settle for a while before it breaks back out. ONVO, this one's coiling up. I've been watching this one for a handful of days here, and we're just the range is getting tighter and tighter. A few more days, and it'll have really nowhere to go except pop to the upside or downside. So it'll resolve itself in the next 3-4 days. UEPS, this was an earnings breakout, and you can see here we've really just held up pretty well. It hasn't even had really much opportunity to dip. That's a good sign of strength here for an earnings move. Probably judging by its float and things of that nature, most of the time you don't come back and retest on a positive earnings move. NSM, this one looks pretty good. It's just been chilling around here for the whole month. This is probably going to be more of a swing trade type of stock. You can see here we've got a nice level of support at 48. And when we kind of break out of this, we should get another run in this bad boy. But it's been in a great uptrend for really the last couple years. HPQ, so Hewlett Packard is after its earnings debacle from a couple, from last week, we've got a bear flag essentially coming out here. So watch this 22 mark. If that happens, we could see a quick flush. I wouldn't be surprised to see it, drop down $1 or so in the day. FANG, F-E-N-G, this one's been flagging for really the last couple weeks also. I probably won't take this stock if the market is acting funky as the volume does thin out on this bad boy. But if we do see a rip in the markets, I watch this move over 9. We could see a really nice pop in it. CNTY, another stock that's been really, after it nearly doubled, we've just had a really light consolidation in this area. So when we can come out of this area, it might need a few more days. We could definitely see another rip. Rovi. So this stock's been really in a downtrend for the last few months, but you can see here we've really been testing this 18 level multiple times. And we take out this area right here, that'll start the next leg down where you don't see really any support coming down to maybe, maybe $16 or so. So we've got some potential downside in that. Ecom, this was really one of the hot stocks. This stock up from $16 to 34 in a couple months, and we're just having a real light, easy pullback for the most part. I'm interested in this kind of 28 range. Whether it breaks back below the 20-day moving average or back above, doesn't really matter. But this is the kind of the area that I'm looking at, and then what I'll do is I'll start narrowing it down on smaller time frames that nail the rip on it. Looking at this for a potential rubber band setup, we're talking about really this stock's been down 17 out of 18, 19 days. I think one more flush down to 7. if this market starts to rebound, we might see some snapbacks in these type of plays. Ruby Tuesday, after this big pop from 11 to 14, and really, a $3 move, we've had a fairly light pullback here. The area I'm really watching is kind of right this 12-ish mark for a breakout pullback play. Anything in this particular area will get me interested for a bounce. The one thing about this stock is it's a restaurant stock, which means all this type of anything retail, restaurant, or REITs, they're really the shittiest stocks to trade in terms of intraday movement. They're really choppy, so just be careful with that. I'd probably go a little bit smaller position and keep a wider stop, and kind of play the bigger rip in it because they suck the day trade. SSH, big move here from 8 to 13, 5-day pullback. Getting down into an area of interest. I think we probably need to get back down, into the 10 to 950 area to kind of really limit our risk, but we're almost there. And then RVLT, we've went from 550 all the way down to 250, so it's been cut in half here, and we're right back at a key level. This is the type of stock most likely I'd play only if the market starts to bounce. If we're still knifing down in the market, then these type of support levels, they just become areas that people short. Supports break when the market is downtrending, and so typically I like using support levels when we have a big push in the market. Otherwise, it's all for nothing. You might get a short-term, kind of bounce in it, but you might not get the big rip that you want. So that's it for now, guys. I will see everybody tomorrow. Take care.